First order of business, approval of minutes. Draft minutes of September 28, 2021, Finance Committee meeting. Do I have a motion to approve?
Move approval.
Approval by Alder Wheeler. Discussion. Hearing none. We'll place it to a vote. Those in favor signify by saying aye.
Aye.
Aye. Those opposed? The ayes have it. Motion carries. Item 3, public appearances, non-agenda items. We have nobody in chambers. Anybody on Zoom? No, sir. Nope. All right, very good. Moving on to the next item. Finance, item 4, Finance Director Report. Treasurer's Report as of July 31st, 2021. I'll turn that over to you, Misty.
Thank you. So it's a relatively lengthy agenda, so I won't go into too much detail on the treasurer's report, but wanted to point out one thing in particular. So in July, I was looking with our advisor, what the CD rates are, and as I mentioned to you before, they're terrible, right? So we also looked at U.S. Treasuries, and they had basically the same term, and it was for a little bit more of an interest rate. They're just as secure as what a CD would be, if not better, because they're backed by the government. So I did invest $250,000 in Treasuries in July, and then in September I did a little bit more. So just kind of another way to diversify our portfolio. The rates are still quite terrible, don't get me wrong, but it's at least in line or a little bit better than what we were able to get through CDs. So I don't know, if there's questions on that before I go into the rest of my report?
I have no questions. Any questions from the committee?
None.
No.
Excellent. Other things to share with you. So the Arpa reporting deadline, it was going to be at the end of October. The federal government, I think, realized that they also aren't as organized as what they had hoped. So they moved that deadline to April 30th. So that's really great. It actually lines up really well with kind of what we're talking about with the plan. To be clear, though, we are spending some of that money now on, the traditional COVID stuff. So the Zoom subscriptions, the OWL that we talked about last time, the hand sanitizer, all of that stuff we're still spending now, but the bulk of the spending plan will be done through you guys, probably in that first quarter of 2022. Stormwater rate increase. So that hit the bills. People should have gotten those in the mailbox. We did reach out, thank you to Mike Zimmerman for helping me with some connections. I reached out to about a dozen of our larger commercial property owners to let them know that rate increase was coming, why, what caused it, and then where the website link was. That kind of talked about more of that information about the why. Wanted to share that with you simply so you know, one, that we did it, but also that we did get some concern from those commercial owners. They did have a bit of sticker shock, I would say, at that large 38% increase. So I wanted to let you know that they had some concerns.
While you're on that one, could you be more specific of what their concerns and, was it about the process?
No, it was purely about money. So it was a 38% increase. That is what we needed to basically balance our 2021 budget. I think in general, people like to see much smaller increases than that. But that just wasn't the situation for our budget this time. Property tax collection is kicking off. So we met with the county looking at kind of the changes that are happening at the state level and the county level. We're also getting our process organized. If you remember with COVID last year, we were over in the community center, so we could spread out a lot more. That room wasn't available now because there's programming happening. So we're going to be in that little conference room next door here at City Hall, still to try to keep a lot of the traffic away from the main counter area. And then we'll allow 2 people in the room at one time, and then we'll have kind of a queue outside the room down the hallway so that people can still spread out if they want to make their payments.
Excuse me, is that the same room as last year?
Nope. So this year we're going to be in the room just next door, that little conference room.
Next door to Chambers?
Yes.
Oh, okay.
Yep. 213, I think is what it is.
Okay, very good.
Mm-hmm. Budget process is obviously kicking off, so I'm sure you remember your amendments are due to me Thursday at 4:30 in the form that I provided in Word, so that I can fill out my part of the form. I will work with you as far as clarity and making sure it's complete, and then they go out to the public that following Friday. So it's a pretty quick turnaround, but you'll learn quickly or soon what the different amendments are that are being proposed. And then last is we're working on our debt issuance still. So Moody's call is next week, Tuesday. So working on that presentation. And then we also are planning to pay off some of our debt early. I believe I mentioned that in one of my presentations. So there's the 2011 debt, about $3 million we're going to pay off with cash in the TID. In order to do that payment, I need to notify the people that lent us that money within 30 days of when I plan to pay it off. So at the next meeting, you'll see a direct referral providing that notice so that we can get that process going. And with all this debt stuff, we generally do it as direct referrals because it's a matter of coordinating with bond counsel and the different timings involved. So wanted to give you a heads up.
And how much is that again?
A little over $3 million that will be prepaying.
Okay.
Yep.
Thank you.
That is all I had.
Okay, is there any additional questions from Finance Committee? Seeing none, we'll move on to review of bills, which is item 5. 5A, detailed review of checks for $10,000 and above September 16th through the 30th, 2021, totaling $1,657,376.51. And questions, anything from you first of all, Misty?
Nope, no comments on this
Okay.
one.
Questions from the committee? Gabrielle?
Thanks. I was noticing, I'm sorry, I'm not pulling up the page correctly. Oh, sorry, page 76 of the packet, 2 of that section.
Okay.
There's that list of different PAYGO interest payments. I was wondering if you could just comment on that. Is there a reason why they're all coming through at the same time?
Yep, so the PAYGO payments, I guess for a little bit of background on that, so those are the TID incentives that we're providing to the different developers that build buildings. And as we collect the increment from them, we reimburse them for their costs based on the development agreement that was approved. So under those PAYGO bonds, we make payments twice a year. So on April 1st, we make an interest and a principal payment generally, and usually on October 1st, we make just an interest payment. One exception is there is a new one in here now, the ProMega one for the Kornberg Center. That is a newly issued PAYGO. I just issued that last week. Once you guys approved the East Sherrill subdivision or public improvements, that was the last piece that they needed to issue the bond, and then we made that first payment now.
And just to clarify for PAYGO, that's a strategy that we choose to do with our TID so that we pay them on the back end rather than the front end so that, you know, we're more sure what their development costs are before we make the payment. Is that correct?
Exactly. It's also called developer risk financing. So the traditional way of TID when it first came out was that the city would put in infrastructure and then we'd hope that the development all happened and we paid it back. Now we've kind of evolved into this PAYGO or developer risk finance method, which means they have to build it, they have to generate the taxes, and then we make the payments afterwards. So it shifts that risk from the municipality and the TID onto the developer to make sure that they do what they promised.
Thank you.
I have a question regarding, well, we're on the first page, but under all the Payne and Dolan items, the first item is the street resurfacing with 8.2%. I'm guessing it's contingency. These aren't all one particular project. I mean, these are the first item, which is $301,000 approximately. This is the street resurfacing project in and of itself. Is that correct?
The whole global project, yes.
Correct.
So this is one payment, I guess, as part of that overall project that they bid on.
Sure. Okay. Okay. So they're not. I'm running through the list and I see McKee Farm. So obviously this isn't one particular project. It's individual projects, money owed to Payne and Dolan.
Yes, and so it's split up in all those different ways to hit the different account numbers that it needs to hit.
Correct. Okay. All right. Thank you. Any additional questions? Okay. Let's move on to 5B, detailed review of all checks issued. Checks numbered 122567 through 122612, September 16th through the 30th, totaling, for the year 2021, totaling $1,725,248.93. Questions from the committee? Okay. Hearing none, item 5C, detailed review of all ACH payments for $10,000 and above for the period of September 1st through the 30th, 2021, totaling $481,908.23. Questions from the committee? The only question I have on this is there's two items for Madison Gas and Electric. I mean, they're both significant dollars. Is there a reason why it's just split out? Is there an accounting purpose for that, or is it two separate bills they for different usage? I'm just curious more than anything else.
I know, I'll have to check to be sure. I know that there was a hiccup at one point where some of the bills weren't on our mass billing, so we had to kind of do them as two pieces, but let me verify that and I'll get back to you guys.
Okay, thank you. Any other questions before we move on? Hearing none. 5D, detailed review of all ACH payments for the period September 1st through the 30th, 2021, totaling $496,605.49. Questions from the committee? All right, hearing none, we will move on to action items. Item 6 on our agenda, 6A. Do we have a motion to approve ordinance 2021 -0-14, creating Chapter 6, Article 5, Division 6, Section 557 of Fitchburg General Code of Ordinances, establishing a Healthy Neighborhoods Advisory Committee?
I move approval.
Approve, motion made by Alder Gerhart. Are you speaking to this, Misty?
I can kick it off, but I know Jim might be able to jump in because he was on CETA, which had a
Okay.
pretty lengthy discussion as well. So the purpose of this one is the Healthy Neighborhoods Initiative Grant Committee was an ad hoc committee, and the kind of scope of that has evolved more to more Healthy Neighborhood Initiative projects besides just the grant review. So this will change it from that ad hoc grant review committee to an advisory committee about all things H&I. And so there is a budget component to it. Once it's a regular committee, I'll call it, there is a per diem, which we will do an administrative budget amendment in order to account for that. And then I'll note that what's included in the packet is as amended by both CETA and that Healthy Neighborhoods Committee, ad hoc committee. So if you want to approve it with those changes, that's what's in there right now.
And do we need to do anything special other than what's already, the changes are already been noted? So,
I guess, why don't we clarify quick? So Gabriella, this is your motion, so it's as presented in the packet with those amendments, I assume.
Yeah, I guess I don't know what the amendments are, so I'm happy to make friendly amendments if they're friendly.
Well, I think if we just go over like what it includes basically, and Mike can correct me if I'm wrong, but is one alderperson whose district covers one of the more priority neighborhoods, one CETA member, one resident of the city, and 4 residents of the city that either reside or work in a professional capacity to address socioeconomic issues and priority neighborhoods identified in the Healthy Neighborhoods Initiative strategic plan.
so basically it's being more specific on, just as it states, composition
Correct.
of that committee.
Correct.
And so that's precisely what's included in the packet then? Okay,
Correct.
great. So yes, I did move it as in the packet, so that includes the amendments from CETA.
Perfect.
Okay. Further discussion? Okay, hearing none, place the motion to a vote. Those in favor signify by saying aye.
Aye.
Those opposed? The ayes have it, motion carries. Moving on to the next action item, 6B, Resolution R-172-21, Police Squad Car Replacement Purchase, postponed from September 28, 2021 meeting. Do I have a motion to approve?
I move approval.
Motion made by Alder Wheeler. Misty, would you like to speak to this before we open it up for discussion
Yes, please.
further?
So this is a purchase of a replacement squad vehicle. It is off of state contract. Another unusual item in here is that at the time that this was originally put forward, the intention was that the used squad car would be repurposed to the assessing department to be used as a fleet vehicle. And this is consistent with what was approved in the adopted 2022 to 2031 CIP. Since that time, and why we postponed it last time, is that the vehicle that we were replacing was involved in a pretty significant crash. The insurance company we weren't sure how the insurance company was going to handle it, which is why we postponed it. As of today, I've learned that the insurance company has totaled the vehicle, so we know that we aren't going to be repairing the current one, so that's a good thing to know as we decide to replace it. I guess the piece that I was a little disappointed in is the amount of reimbursement we're going to get from the insurance company is about $6,500. So the insurance that we have is replacement cost if the car is 4 model years or newer. So because of how old this car is, it's based on actual cash value instead, less our deductible. So we'll get about $6,500 for it. So that's where we're at now. I would recommend that, assuming you want to proceed with this purchase, that you would approve the purchase from the vendor, as we always intended to. And then with the assessing budget amendment, I'm assuming you're supportive of kind of that strategy overall, I would recommend still approving that budget amendment piece, recognizing that they're not going to get this vehicle because they don't want that one, but then the money will be available for the next squad that's replaced in 2022. The reason why assessing is able to do it now is because of the vacancies that they had, so there's funding available, and I'd like to put that to use to get them the fleet that we wanted. They may have a harder time to accomplish that same goal in 2022.
So you mentioned 2 components to this process. I see one resolution. Are you asking us to amend?
Nope.
Nope.
So I would suggest approving it as is in the packet.
Okay, very good. Just want to make certain clarity. Further discussion? Yes, go ahead.
Just one clarification, in the resolution, it does say $6,000 for a transfer of funds, and you mentioned that it was $6,500 we're getting from the insurance company. Do you not care about that level of detail, or should we amend it to be the precise amount that's the insurance payoff?
So that's different. So the
Oh.
6,000 is the amount that assessing will pay for really the next squad for it.
course.
The 6,500 is how much we'll get from the insurance fund. From an accounting perspective, I'll take that money into our insurance fund once we have that exact amount, and then I'll transfer that to the vehicle equipment replacement fund that the police has, so that they have that as, I guess, additional cushion for future vehicles. Honestly, for $6,500, I was hoping we'd get it replaced instead, let's be honest.
How old is the vehicle?
I think it's 5 years old.
Okay, no, that's fine. It's just, yeah, yes. Yeah. All right, further discussion. Hearing none, I'll place the motion to a vote. All in favor, signify by saying aye.
Aye.
Those opposed, the ayes have it, motion carries. Action item 6C, Resolution R-175-21, approving a workforce housing endowment program feasibility study completed by H&A Advisors, LLC, for a rent-to-own townhome project. Do I have a motion to approve?
So moved.
All right, motion made by Alder Gerhart. And who is speaking to this evening? Do you know, Misty, offhand?
Yep, so the consultants, Mike Harrigan and Steve, are both here from H&A. I'm not sure if Mike or Joyce want to kick it off, or if you want to just go into them. Mike wants to talk.
Okay. I've noted that, Mike.
Mike Zimmerman, Economic Development Director for the City of Fitchburg. Thank you for the opportunity tonight. The Housing Advisory Committee and our Community and Economic Development Authority have been working with H&A Advisors, Mike and Steve, on a rent-to-own housing endowment pilot program that would utilize some of the funds from our, hopefully, affordable housing fund when we close either TID 4 or TID 6. So we're doing some of the preparatory work right now in anticipation of those dollars in the future. This would help to address the missing middle situation that's out there for people that are struggling getting into home ownership. So I'll let Mike and Steve provide the information, give the overview and the financials on it. But we think this is a good test pilot program and could become a renewable program that replenishes over time. So it wouldn't just be the first 10. Hopefully, if we're successful, it continues to provide new housing stock for us and ownership opportunities for that missing middle. Thanks.
Thank you, Mike. And I'm the H and Steve is the A in this operation. And I will just kick it off by saying that it's really been a pleasure to be able to work with CETA, the Housing Advisory Committee, the Plan Commission, and the Council on this project over the last several months. I know your time is limited this evening, and I wanted to give plenty of opportunity for questions. So therefore, Steve is going to give an overview of the program, and then I'm going to walk through a couple of the spreadsheets that we're using. Since this is the Finance Committee, I wanted to take the time to talk about a little bit of detail in terms of sources and uses and cash flow and what we discovered as part of our analysis when we went through this process. So, Steve, would you like to begin?
Yeah, thanks, Mike. Good evening, everyone. I think attached is the PowerPoint. We're not going to go into detail at this point about that, but let me just take a minute to provide just a quick overview of the program. We've developed, Mike and I, this concept after working in the area of public finance for the last 30 years. And we're fortunate to be working with you on the development of a pilot program on a rent-to-own workforce housing concept. And so in the first order of business is what does that concept look like? And as you recall, we did do a survey in July or in May for both the council, CETA, the Housing Advisory Committee, and the Planning Commission. And out of that then came a concept of what that program would look like. And a quick summary of that is keep in mind the design of the program is such that anyone as far as occupancy, any tenant in any one of the units would pay only 30% of their income as long as they occupy the unit while they rent and at the point then when they purchase the facility and own the facility. So that keeps it consistent with industry practices. We've also, as a result of the survey, then developed a target for this feasibility report that's been prepared. The workforce housing segment that we're addressing is 80 to 100% then of median income within the county. And at 80%, that would equate to about just under $18 for each of two earners, to give you a feel in terms of the level of income that 80% would be. The development that came out of the survey then looked at creating a 10-unit townhouse style construction. The estimated cost per unit is about $332,000. While we did our analysis, there'd been approximately a third increase in the construction field. And so this is a substantial increase in the number from what we've focused on. But keep in mind that in spite of that, they're only going to be using 30% of their income to pay for housing, which is really the benefit of the program. The development then would consist of a unit then that would consist of 3 bedrooms, 2.5 baths, about 1,400 square feet with a 2-car garage. So that would be ultimately the type of unit that would be constructed and was the focus of the feasibility report. In addition to that, the tenant then, the CDA would build and own the facility. They would rent it to screen tenants. There'd be a management company that manages the facility until there was enough sufficient equity. And in our assumption within the report, we assumed conventional financing. In other words, that there would be sufficient equity generated by paying down on the debt, increase in the value of the facility, such that within 2 to 4 years, the tenant would be, depending upon if they're 100% or the 80%, 2 to 4 years being in a position then to secure conventional financing and then buy the building from the CDA or from CETA. We've talked to 3 different banks in the area. They're certainly looking at programs that could assist us in the takeout that would accelerate that, but we don't have anything and have not incorporated that into the report, at least at this point. Each tenant, it would be anticipated, would have about $5,000 of equity at risk. CETA then would use tax increment monies. Mike will talk about the extent of the revenues. We've anticipated that the project is about $3,225,000, of which there'd be about $1 million of TID. All of that, with the exception of about $45,000 for some legal fees, is anticipated of being recovered and paid back then to CETA, which would be available then on a sustainability basis. In other words, it's not one and done in terms of the use of the funds. The funds would come back into the city and could be used then for other developments. So that's a quick overview of all of the elements of the program. Mike, you want to just touch on a couple slides? Oops, I'm not seeing Mike.
He is no longer on Zoom.
All right. Mike was going to be sharing the exhibits that you have in front of you. If you have the PowerPoint.
It's
yes.
Joyce. Mike sent an email that his computer crashed. He's trying to reload.
Okay. Well, let me, in his absence, he was going to cover this. Would everyone have access to their PowerPoint in the packet there?
Yes, and would you like me to share my screen? Is that helpful?
Yeah, that'd be very, very nice, or very great if you would then, please. Page 5 is the sources and uses. This was put together to show you the sources of funding. You'll see there's a funding source, and that would be one of the decisions for the Finance Committee as we get, if this project were to proceed, is that the financing is projected to be about $2,125,000. That could be done through a loan from the banks, or depending on the desire of the council and the Finance Committee, could be cash from the tax increment district. In addition to the additional tax increment monies that have been identified, you'll see then the $820,000 as well as 2 reserves have been identified. Those are anticipated to be repaid back as a part of the program. You'll see then for acquisition costs, we have a unit cost of about $320,000. We did talk with, I think, about 6 different builders trying to get a feel for that construction number, as well as various management companies in our analysis. If you would, Misty, if you turn to the next page, please, which would be 6. I think the one before that, please. Yes, thank you. This is an example of ranges of when the takeout would occur and for different percentages. So the first column on the left is the 80% of adjusted gross income. You'll see in the middle there's 10 years at the point that there would be the takeout. We're hopeful that that can be reduced by programs that might be available from local banks for first-time home buyers. As we mentioned, we've identified just conventional financing for the takeout. And if as someone were at 100% of adjusted gross income, 4 years then would be the takeout. So we don't know what that mix would be. We'd be screening tenants that would likely be a large range of those. And those are the takeouts that you'll see. You'll note down below then that the equity financing that comes back then at the time of takeout, a portion of that $820,000 comes back to CETA for additional programs. In addition to that, if there were some additional dollars used to reduce their housing cost to 30%, that was up and above the traditional 20% equity, that would expected to be repaid then at the time that they would have their mortgage repaid or sell the property. Misty, if you could go then to the next page, was just a quick takeout in terms of what that would look like for an 80%er. I'm not going to go into a lot of detail there. And if you would turn to the next one then, one of the questions is what happens at a takeout? We wanted to use this as an example. This is an 80%er. This is, by nature, we're conservative, and so this would be a worst case. There'll be other people that would be tenants that would be 90% or 100%. Numbers would be the same in terms of what would happen here, that there'd be a repayment. But you'll see then, based on appreciation, the house price is 370 at the time. The payoff to the CETA, which would be the loan for the portion, would be 158,000. That would be on the existing financing. Equity then would be about 220. There's a little bit of a reserve that's accrued because the 30% they're paying is if the actual expenses are less than that, there's a little surplus created. The uses then is that 20% would go for the down payment. To keep their housing at 30% of adjusted gross income, there would be an additional contribution of 76 that would be needed. And last then, CETA then would be repaid the 82 as well as the additional 10 there on their investment, which would come back into the endowment fund. So that's a quick overview of the finances. There are other ideas presented in the report. There's an addressing of risk factors, as well as some of the open-ended questions which have been addressed by CETA. We can certainly answer questions on that as we go forward. So let me turn it back to you, Mr. Chairman.
Thank you very much. You covered all the finance portion very well. Thank you, I do appreciate it. I do want to just jump back to the risk factors and just a quick summary. Some of the, like, for instance, the unforeseen life events, I mean, is that pretty typical? I mean, how specific are you getting on that particular, is it just death, or is there other circumstances that we just wouldn't be aware of or should be aware of?
Well, I think we're contemplating that there'll be changes in life factors. Maybe a parent dies that they need to move. There may be death. These are sort of extraordinary situations, and we
Right.
certainly would not like to see those occur, but we wanted to at least recognize that they do exist and develop a plan to address that.
Well, you make a very good point. If a parent or somebody dies and they need to move, I just wasn't sure if it was just specific to the actual borrower, we'll call it that, with the signature on the loan. And then early program termination. Are you speaking of they terminating early, or are you, or I guess, could you clarify that a little bit further?
Sure. Mike, do you want to pick that one up?
And by the way, I apologize for the lapse there. My system wasn't cooperating with me, and we just ended up with a very bit of a hiatus. But Steve obviously picked it up, and so in the event of an early termination, this could be in the event that we had and by the way, we have details of all of this in our full report on pages 23 and 24, along with possible mitigating actions. But this is the scenario when the city would want to take a look at the possibility of terminating the program. We're advising that before entering the program, we would have taken the opportunity to provide various points of further analysis as part of the second phase to examine various factors of cost, as well as various factors of risk that we've described here, such that before you ever got to that point, we'd be looking at the ability for the city to make a decision if it chose to not proceed to do that. But we're recognizing that these are decisions that can be made incrementally as you go through the process. And we would expect to take each step as it comes, and then have decision points to be made along the way before you reach a point of no return in terms of the process.
Very good, thank you, Mike. Questions from the committee? Yes, Alder Gerhart.
I have several questions, and if that's all right.
Yes, no, go ahead.
For RNH, so have you been developing this model prior to Fitchburg's interest in implementing it, or is this something that you developed because Fitchburg approached you about this type of model?
We had developed this in advance prior to Fitchburg contacting us. We really had, just to give you a little history of our roles in our past, I had served for 26 years with the Ellers Fund, which happens to be the financial advisory firm that your community is with, and I had the good fortune of working with Fitchburg. But I work with many, many other communities across the state. We identified the fact that many communities have a great need for workforce. The companies that exist in these communities have a need for workforce. One of the obstacles to meeting that workforce need was housing in many of these communities, and particularly in the targeted income segment of 80 to 100% of median family income, because there are programs like the low income housing tax credit program and others that address the lower segments. And so when I retired from Ellers, and Steve retired from Ellers, he was the president, I was the chairman, we put our heads together and determined that they're utilizing some of the tools that were out there. There was a way to address this. And so we spent about the first year after that retirement process in vetting this with various legal as well as practical builders, developers, and others in the communities before we promoted this as a possible solution to different communities' needs. And so what we recognized is each community is a little different. Some communities, a rehabilitation approach would perhaps be the appropriate solution. Other communities, multifamily is a greater need. And so part of the process that we have utilized has involved the survey approach to really understand what is specifically needed in each community and what it is. And that's what we used in Fitchburg, was to go through that. And thank you, by the way, for everyone that responded to that, because we were then able to tailor this to more specifically meet what Fitchburg, we hope, was looking for.
So are there other,
That,
yeah, that's very helpful. Are there other communities that have actually implemented this model, or would we be one of the first or the first?
one of the first. And there are other communities that have used the rent-to-own model, but not this. Our approach is a little different because it involves utilizing the tax increment dollars and then returning them to the community so that they would be able to replicate it again and again. That has not been done before.
And then the other thing I'm concerned, well, the one thing I'm concerned about, I'm looking at the page 8 of, or slide 8 of the presentation, and it says the projected home value sale price is $370,000, or close to 371. That is much higher than the average home value in our community. Our average home value is about $330,000. And I would think that somebody that's making 80 to 100% of the median income would typically be purchasing a house that's less than the average home value. So what is the purpose of having the home value set that high? Are we trying to, it seems like there could be two goals. That one goal could be to help this family build wealth, which I think is a very valuable goal, and creating a higher value house would work towards that end. But also, I mean, like I would love for this unit to be affordable in the future. So when this family chooses to sell their rent-to-own home, that unit is on the more affordable end and is not far, far above the average home value price in Fitchburg. Can you just comment on the strategy behind making that be the price?
Absolutely. Two things. I want to point out the number that you're referring to on slide 8, the $370,000 is actually the projected value at the point of purchased by the tenant 10 years down the road. And so that reflects appreciation at the rate of 2% per year over a 10-year period. The current value that we're projecting of the unit is about $330,000. Now that number was arrived at based upon actual takeoffs of design based upon the size of the unit that the community felt, minimum size that it felt comfortable in promoting, the 3 bedrooms, the 2.5 baths, and the quality of construction that it was seeking, including providing for fire protection, sprinkling, and other amenities and such as the covering the costs of all of the park dedication fees, et cetera, et cetera. They add to the cost. And so while when we started looking at this, we were looking at a unit cost of closer to $280,000. Of course, during this period of time, we experienced some rather radical increases in material costs that happened across the board throughout the country and certainly in Dane County. That moved the goalposts out a little bit in terms of the length of time, but the key thing here is that this program is designed to continue to make it affordable so that these tenants are never paying more than 30% of their income toward housing. And it provides the opportunity for the wealth growth, as you point out, and it returns the dollars that were originally invested by the city to the city so that the program can be repeated again and again into the future, recognizing that costs will continue to escalate. Steve, do you want to add to that?
No, I think that's a good summary, Mike.
If that's okay.
You have the floor.
Thank you. Okay, that's very helpful. Is there an opportunity to actually lower the original cost, or is this the model, or is that going to be part of the future discussions? Because it just occurs to me that even a home that's at the average home value currently is still kind of a high cost home. That doesn't seem like an affordable. I don't know. Were those floor plans developed in collaboration with developers? You know, is that the only type of home they're interested in building? I don't know. Is there an opportunity to change those floor plans as this process moves forward?
Well, short answer is yes. I mean, there's an opportunity for modifications as we move forward into phase 2. One of the things that we pointed out in our report was that we had to make a lot of assumptions. One of them, of course, was the cost of land acquisition and the specifics of a site, which we didn't know because we don't know exactly where this will go yet. One of the things that will be important will be for the city to identify where it would like to undertake this type of a project, and if possible, at minimum, at least tie up the property with an option or some other form of agreement so that we know exactly what the cost would be pertinent to that particular site. I think at that point, we can really begin to sharpen the pencil and do a better job of nailing the specifics down. We tried to be conservative and to include numbers here that hopefully we'd be able to pare back when we know exactly what we're dealing with down the road. But
Great.
for those that understand our approach to generally number crunching, it's to be conservative and then hope for a better outcome, but to plan for a little more severe cost package at the front end.
Awesome.
Sure, if I could just add to Alder Gabriella's question there. In our 2022 budget, we have the next phase of the analysis, which starts to look at specific sites. So in our 2022 budget, you see a proposal to engage with Mike and Steve on that next phase, if there's support for the program kind of parameters philosophically here today. And the other thing I'll add is, you know, we've been struggling with that wave of construction cost increases, just like, you know, any housing development and developer that's out there. But I think the focus of this program, even with those escalating costs, has always been on making sure that it remained at 30% of that family's income level there, to maintain that degree of affordability, even with the escalating costs that the market is dealing with right now. And we're hoping maybe when we get to phase 2, that, and more site-specific, that those costs start to level off a little bit, so maybe there will be some price and cost adjustments. No guarantees, but that's the hope.
Okay, sounds like the thought. Yes. Go ahead.
Mike, if I'm not mistaken, we got the 3-bedroom, 2.5 bath, 2-car garage. That was from a survey, correct?
That's correct, yeah.
So my understanding, I mean, if we wanted to kind of tweak that or maybe take that survey out a little bit further, you know, to more people, because I forget who it went to. Was that just council and a few others, or?
Yeah, it went to Council, Planning Commission, Housing Advisory Committee, CETA. I think department heads were included in that as well. Mhm.
Yeah, so if we could get that out maybe to
Builders,
a few
yeah.
more people outside of, you know, government to see if we could change these dynamics around. Maybe we could bring the price down a little bit, because I agree, it is a high price, but I like the program, you know, that we actually are putting something, you know, aside, you know, for affordable housing, workforce housing.
And I think as we get to the next phase, because one of the emphasis that we had, and Joyce and I working with Mike and Stephen with the committees, is we also wanted to maintain the quality of the product, you know, too, and not, I don't know what a better term would be, but dumb down the product or make it a lower quality, or, you know, eliminate the sprinkler systems. You know, that's something that, you know, we value as, you know, kind of a life safety, and we wanted to make sure that we were, you know, if we're going to be involved in developing and owning and managing it in the rent-to-own period, that it was of the quality that you would expect in Fitchburg. And also that we didn't want to put a stigma on it either, that, oh, well, that's the affordable housing, you know, development, because it looks different or isn't at a level of quality. So that's been part of our emphasis there. And I think Mike and Steve also, in vetting the additional square footage that came out of the survey there, the cost of that on an incremental level was not that exorbitant there to finish that off. As they talked to the builders and everything, it seemed like some of the additional square footage that we were looking at was actually more cost-effective, you know, to kind of add to it. And I would just say anecdotally, and this is just from my own experience in looking at housing here in Fitchburg, you know, we're really missing this kind of product right now as far as new inventory. Before the housing bust, you know, it was the condominiums that kind of served as that entry point to ownership, and a lot of that townhome product. I watched it at Hatchery Hill, where the single person or the couple would move in, they'd buy, that was their first purchase, and then they'd have the first child, and then usually was the second child that kind of triggered them then to look to, you know, kind of upgrading to a single family home, and they had built up enough equity by that time to kind of move up the housing market, you know, here. So I think that's why this is that missing middle part here that maybe helps individuals get into ownership. And I think you hit on a key point, and it's another goal of the program here, is to maybe help people and their families that have never been in ownership before to build wealth that is generational wealth. So it's not just the ownership, but building that wealth with families in our community.
I have a couple more questions, and hopefully they'll quick.
You have the floor.
I hope this can just be a yes or no, but I assume that there's some sort of application process for getting these homes that we're going to have to develop as part of this project?
Yes. And Mike and Steve have already had some conversations about management companies, about how you would approach something like that. Okay. And I think that'll come again in that next phase, you know, as we look at.
Second question would be, is there discussion about what happens on the back end? Because I assume if we're invested in these properties, we would like these properties to stay with homeowners and not be purchased by investment companies that are going to flip them, or an investment company that's just holding them as an investment and leaving them empty, which I know is a problem in some communities these days. Can we put some sort of stipulation on the sale of this home in the future to make sure it stays in the hands of families?
That's a good question, and I guess I would defer to Mike and Steve to see if they have any suggestions on how we do that. But I think that's a very good question and point. Mike or Steve, you got anything on that?
Well, I think we had talked at the CETA meeting in regards to whether or not there would be any sort of a land covenant associated with that. I think in our initial discussions with the bankers and with the builders, they thought that is something that that from their standpoint would complicate additional financing in the future and make it less likely that someone would want to buy the property because there's an additional step that needs to be jumped through. But we did talk about should the council want us to do an additional analysis on that whole area of, you know, what the covenant could be and what the impact would be if in fact you were to go that direction.
Thank you. I'm done.
Okay. Any additional questions from the committee? Well, thank you very much. Sounds like there's a lot of thought that went into this, and I'm in support of the project, but I'm sure there'll be a lot of other comments and tweaking to come. Thank you very much. Thank you, Mike. Thank you, H&A as well. Appreciate your time. With no other discussion, I will place the motion before us to a vote. All in favor signify by saying aye.
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 Aye. Those opposed? The ayes have it. Motion carries. Thank you. Moving on to the next item on the action item, and that would be, I'm going to make sure I have my place here correct, item 6D, Resolution R-180-21, approving a contract for Teen Services and Resources Facility, Community Engagement Services. Do I have a motion?
So moved.
Moved by Alder Gerhart. And who will be speaking on this evening, Misty?
Let's actually have Wade kick this off. He's been the staff contact for this project.
You have the floor, Wade.
All right, thank you, Finance Committee. Yeah, I think folks are fairly familiar with the Teen Center project, so this would be the first step moving towards implementation of that facility. Essentially, a roughly $31,000 contract to start with community engagement in terms of what that facility could ultimately look like. So really getting a sense of neighborhood and community needs and wants, again, related to how that facility could ultimately look. So staff did put out, so I guess initially there was funding from the council, I believe approximately $25,000. There was some private donations as well. And then we did also reallocate $3,000 of funds raised by United Way into this pool of money for this study as well, or these services as well. So staff, after we had that money in hand, staff put out an RFP seeking proposals for these services. We did receive just one bid, in staff's opinion, a high quality bid. After we received that bid, we had a 5-member interview panel composed of city staff, city residents, as well as neighborhood program and service providers. That 5-member interview panel unanimously voted to recommend approval of this consultant to contract with the city to provide these services. So what you see before you here today is that draft contract in resolution form. Again, $30,000, I believe $30,850 to compensate a consultant, EQT by design, for those services. I do also want to point out the last page of the resolution is a addendum to an MOU we have with United Way. And again, this was a couple years back, but we did enter into an MOU with United Way to kind of pilot this fundraising campaign premised on our HNI initiative. Again, we did raise $3,000 with that fundraising campaign. We did check in with the donors. They are fine with having the money go to this project, but just to dot all our I's, cross all our T's, we wanted to make sure that kind of that movement with that MOU was in writing. So that addendum to the MOU is clarified as part of this resolution. But again, the big picture here is to ultimately recommend a contract for approval to engage with EQT by design for services to move towards development of this teen facility. So with that, I can certainly take any questions the committee might have. I do also want to point out the principal from EQT is here as well, Annette Miller. So Annette can certainly address any questions that the committee might have.
Very good. Questions for the committee? Discussion. Alder Wheeler.
And Wade, could you go over the process for sending out our RFP, how it comes back, and that
Yeah.
process itself?
Certainly. Just bear with me here. I'm trying to pull up a few documents. But yeah, like I said, I know this was discussed in council quite a bit, quite a few meetings. But once staff understood the amount of money available, we did put out an RFP. using a standard city template in terms of an RFP, you know, one we've used many times. That was put out, I'm just looking at it right here, Monday, or excuse me, it was due Monday, July 12th. I believe we put it out, June 18th. So it was open about, let's say, 3 weeks plus. Now, this was obviously a pretty niche service request, one that I have not done before in my role with Fitchburg, so I was very conscious of making sure this got to as many people as possible, beyond just our normal distribution channels, to ensure, again, a number of responses. So I did post it on our standard city RFP site, which is called Demand Star. We do need to get it in the state journal, so it was in the paper. Our city website is another standard distribution outlet. And then I did, per city policy, we can send it specifically to individuals or entities that we feel might have an interest in responding to an RFP. So just not to give you a laundry list, but I want to be clear about process. We did send it to a group called LASUP, which is a local Latinx email listserv. We sent it to the Allied Drive Neighborhood Resource Contact Team, which is basically a large group of governmental staff, nonprofit orgs, as well as residents. We also sent it to the Leopold NRT, so a same group, but for the North Fishhatchee Road neighborhood. So again, government staff, nonprofit orgs, as well as residents. And then we also sent it to Latino Academy of Workforce Development, and then a few individuals. I don't know if these names will mean anything to people, but just to full disclosure, a woman named Sharon Johnson, Annette Miller, and Debbie Biddle, who again all had experience with this type of work. So once that proposal was put out to bid, again, we waited till July 12th, and then again, did receive just one bid, UQT by Design. And Jim, I can certainly stop there or then talk in more detail about, you know, the interview process once that bid came in.
Yeah, could you just tell us who was on the selection committee?
Yeah, so we had a 5-member panel. Emily Bourne, City of Fitchburg resident, as well as a member of our city's H&I committee, and also a member of our plan commission. Joe Maldonado, Fitchburg Alder. Marlon Hanna, Fitchburg police officer. Brian Estrella, a City of Fitchburg resident, as well as, again, a member of our city's H&I committee, and then also a social worker at Joining Forces for Families, which is a kind of a Dane County spinoff of a social work group, and then myself. So that 5-member panel, we met beforehand, we discussed parameters, we created a list of questions as well as scoring scales, and as a result of that interview process, we also did require a short presentation from the consultant. After that interview was done, we did discuss amongst the panel, and I would say unanimously and enthusiastically agreed that UQT by Design would be a good fit for this project. I also made it clear to our interview panel that even though we received just one bid, we were under no obligation to go with that bid if we weren't comfortable with it as an interview panel. So that being said, you know, full clarity or full disclosure to that committee. Even with that qualifier, again, the committee felt really good about going with this firm. I also did consult with our city administrator. Again, you know, normally in an ideal world, we receive more than one bid. In this case, we received, again, just that one bid. But after discussion with our city administrator, again, letting him know about process, quality of the applicant, quality of the proposal, I was directed to make a conditional offer to UQT by Design for these services. So.
Thank you.
I do have one question, or maybe two. Is that typical for only one, I'll say, vendor to submit a bid? I mean, we're in Dane County. I'm a bit surprised there wasn't, you know, a lot of nonprofits within the community. I'm a bit surprised that only one applied.
Yeah, I think this was my 5th RFP with the city of Fitchburg. This is the only undertaking I've had with just one bid. You know, I've probably had 2 or 3 bids before as a low number. Again, I think it's somewhat relative to the uniqueness of this project, of these services. Oftentimes in these kind of projects, you have a what I'll call a head consultant, more of a planning design firm, kind of designing the facility, and then a sub-consultant, maybe focused on engagement. In this case, we're kind of doing that, so I would call it a step A and a step B, planning and design and also engagement. With this proposal, we're not doing the design or the planning, so I think that limited our pool of applicants that would potentially be interested in bidding. I believe there are other examples of other staff in the city in the recent past that have put out RFPs that have got no bids, or maybe one bid. But yeah, generally speaking, to your point, Randy, in an ideal world, we would have had more bids. But again, I think for various factors as identified, we did just receive the one bid.
And one question, and I probably should know this, but a lot of documents here. When is this bid, or what does this due back to you and the committee and so forth?
What, you mean the final work product?
The final work product, yes.
Yeah. I believe spring of next year, or spring to early summer. It's in the contract. I don't have it with me offhand, but I think we talked about an 8-month window of work, once the contract is approved. So I would say late spring, early summer.
Okay, very good. Additional questions from the committee?
Yes.
Alder Wheeler, go ahead, you have the floor.
My question, or actually is for Ms. Miller. How you doing, Ms. Miller? I'm glad you were able to join us tonight.
Alder Wheeler. Good to see everyone.
I can't hear you. Can you hear me?
Yes?
Oh, okay. Could you just provide us with an overview of like your project team, similar projects you have done, what kind of communication you'll have with the council?
So you want an overview of how we're going to do this particular project, or you want an overview of, just one more time, I want to make sure that I'm going to answer the right question.
Yeah, I'm just looking at the what you provided to the committee. It was like a brief overview, and it was like 4 questions there. And if you could just provide us with like a brief summary or whatever.
Sure. So again, to all of you out there, my name is Annette Miller. I am CEO and founder of Equity Design. Our work is really around strategic advising and doing design thinking approach on how we create and embed diversity, equity, and inclusion in the work around public engagement, and also looking at how we do organizational change for organizations that are trying to create inclusive culture. So for this particular project, this is public engagement. And so what we do is we have an equity lens strategy where we really try to make sure that we have a broad and diverse and representative perspectives at the table to make sure that we are able to reach difficult to engage, involve, or bring along particular constituencies because they've either been historically underserved or marginalized, or the design process hasn't been set up in a way to really bring forth their voice in the community and public policy sphere. So we really try to develop our strategies to ensure that we build bridges in the community to make sure that they are the center of decision-making on projects such as this, which in this case is the Teen Center feasibility study for Fitchburg. But we really try to make sure that we use different kinds of tools to be able to do that, whether it be one-on-one engagement, doing public workshops. We will do affinity groups to ensure that people feel comfortable about talking about their opinions and perspectives on whatever the particular project is. We do polling, we do community-wide social media pushes out to the public and specifically to those underserved and hard to reach community members. In this particular case, we said that we would be focused on, we really want to highlight the youth. And so we really want to work on putting the youth as front-facing on this project. I'm the primary on this particular project. And I do also have contracted staff that were also included on the proposal. They'll be helping me with some of the design and the engagement strategy behind the scenes in terms of doing this work. But we also have a work group that we're pulling together to help in ensuring that we get the, in this case, we really want to center the youth because this is about a youth teen center facility. In terms of how we'll be working with the council, that's really based on the instruction and feedback that I get from Wade in terms of how every municipality has like a process in terms of how much or how little they want to be engaged. So if there's a particular committee that will be reporting to, or if there are particular meetings that we'll be reporting to in terms of the council, we'll be doing that accordingly, either on a milestone basis or, however it's arranged and designed based on, once the contract is put into place. Those are the kinds of things we talk about in detail.
You still have the floor, Alder Wheeler. Go ahead.
Okay, thank you for that. So this is just concentrating on the teen center, but say your information gives you something else that maybe you need more something additional than the teen center. You may not need a teen center. Maybe it says you need a family center, community center. Will you be looking into that too, or is it just focused on, we need a teen center and let's look to see how we're going to do that?
So again, like I said, our work is, and our job in doing engagement is we really focus on listening, learning, and understanding. We've been brought in to focus on the feasibility of a teen center. So when we do our engagement, we bring up and we rise up what we learn from the engagement process. So based on what we hear from the community, that's what we're going to bring forth. And then we make recommendations and set up key findings if there are things that we feel are really important for the planning team and for the council to know. We will note that in the report, but the RFP was pretty clear about what it is we're supposed to be doing. So we'll be asking questions and setting up the design to be asking people in the community about, the feasibility of a teen center. What do they want? What are they looking for? What concerns do they have? What worries them? Think questions like that, and then use different tools to be able to elicit those different responses as part of the design process.
Thank you.
Okay. Any additional questions? Okay, very good. With that, thank you. Thank you, Annette. Let's place the motion before us to a vote. All those in favor signify by saying aye.
Aye.
Aye. Those opposed, the ayes have it. Motion carries. Moving on to the next action item, which is 6E. Resolution R-182-21, authorizing a design contract and budget amendment for EOR related to the Sherrill Drive stormwater improvements. Do I have a motion? Motion to approve.
So moved.
Motion made by Alder Gerhart. Misty, who will speak to this?
I can take this one.
Very good.
So this is I guess let me back up. So Sherrill Drive stormwater has been an issue. They have done a evaluation of kind of what the different solutions are that might address the problem. At this point now, we're ready to design something to help fix the problem. It is included in the CIP for design, but it's not until 2022. So that's why there's a budget amendment associated with this as well, that basically takes funding from another capital project within the stormwater fund that went unused and use that funding for this project so that we can get it started in 2021 rather than waiting until 2022. And so the pre-approval is included in here so you can see the process that was used. I guess that's all that I have.
Okay. I'll open it up for discussion from the committee. Any questions? Oh, I see no questions. So let's place the motion to a vote. All of those in favor signify by saying aye.
Aye.
Aye. Any noes? Motion carries. The ayes have it, motion carries. Moving on to the next item. Resolution R-197-21, adopting the 2021 sick leave use MOU with the WPPA direct referral. Do I have a motion?
I move approval.
Motion made by Alder Wheeler. Misty?
Yes, so with COVID, ultimately our goal is that if there's somebody that either has symptoms or has a confirmed case of COVID, we really want to make sure that they have the ability to stay home and take care of that. So last year when this all happened, we had a variety of different policies that were available. The one that we continued into 2021 is that we wanted to allow employees to essentially tap into their sick leave in advance of earning it. So generally, you would have to earn your sick leave first, and then you could take it. But because of COVID, and then this would be strictly for COVID purposes, an employee could pre-use their sick leave that they will earn by the end of the year. So this benefit was offered to all of the non-represented staff, but because it is different than what's in the union contract for both the police and the fire unions, a separate MOU is required to offer that same benefit to those groups of employees. So that's why there's two, one for each union.
Very good. Any discussion from the committee? Hearing none, we'll place the motion before us to a vote. All in favor signify by saying aye.
Aye.
Aye. Those opposed, the ayes have it, motion carries. Next item, 6G, Resolution R-198-21, adopting the 2021 sick leave use MOU IAFF direct referral. Do I hear a motion? Have a motion.
So moved.
Alder Wheeler placed a motion. Misty, want to comment on this any further, or?
So this is the same thing. The other one was for the police union. This one is now for the fire union.
Very good. Is there discussion from the committee? Hearing none, let's place the motion to a vote. Those in favor signify by saying aye.
Aye.
Those opposed, the ayes have it, motion carries. Moving on to the next item on the agenda, announcements. Our next meeting is scheduled for October 26, 2021. Moving on, do I have a motion? Do I have a motion to adjourn?
So moved.
Motion made by Alder Wheeler. Discussion. Hearing none. Let's place it to a vote. Those in favor signify by saying aye.
Aye.
The ayes have it. We are adjourned at 6:43 p.m.